Now, financial technology company Paymentology has recently reported that it expects profits in 2024. This is as they leverage cutting-edge technologies to streamline transactions and drive efficiency. Joining me now to unpack this in greater detail is technology correspondent for Business Day, Mudiwa Gavaza. Mudiwa, always a pleasure. Good afternoon.
Good afternoon, Olutando.
All right, let's talk maybe about Paymentology as a business. We do know that the fintech landscape is concentrated with payments businesses. Is Paymentology one of them, and what sets it apart?
So what's different about Paymentology, at least in the context of the fintech players that we commonly talk about, is that this is actually a 20-year-old company, right? As opposed to, when you hear of some of these names, there are names that have popped up in the maybe last 5 to 10 years, and you'll be hearing, no, they're raising this capital or they're doing this new thing in the market. But Paymentology has been around for about 20 years. They have a funny term to say that we've been processing payments on soil in South Africa for 20 years, and it's probably because the company has gone through an evolution. Previously called Tutuka, but now they're called Paymentology. So I would say that's what sets them apart. And then the other thing is simply the fact that they are working, I guess, together they enable other fintechs, basically, because one of their specialities is that they specialize in helping organizations, fintechs, banks to issue and to be able to process both physical and virtual cards as well.
Very interesting, Mudiwa, because this is a company that now, after 20 years, says it's turning a profit. That's how it works for fintechs, isn't it?
So the way I'm understanding it is that we sort of have to distinguish between its former life and where it is now. That's one of the things that I understand. Not 100% sure where they were, previously, because it's been such a long road, where they were in terms of profitability in their previous, iteration. But now, what happened is that a couple of years ago, they were, bought up by a group of investors, and then a couple of acquisitions were made, and then they were now fed underneath this one group and called, Paymentology. So in its current form, that's what I understand to say that, this reimagined business now called Paymentology is what's actually profitable. It's made up of Tutuka, it's made up of Mia Wallet and a couple of other businesses.
I must tell you, Mudiwa, something I think we've spoken about this is one of the very interesting things about South African businesses, particularly, especially tech ones, is the fact that mostly South African investors don't have the appetite to walk a long journey with a company that has to grow and scale and then, turn the corner and then break even and then become profitable. Let's talk about this dynamic, in South Africa, and companies like Paymentology and other fintechs, if, they're maneuvering the space or if it does take you maybe even going abroad to find investors who may understand a little bit better.
So what's most interesting to me about this particular, I'm going to call it development, right, is that in its current form, Paymentology is South African funded, but they've definitely taken a more global stance, in their approach. And for me, them highlighting the fact that they'll be profitable, this year speaks to, apart from the South African investor sentiment, global investor sentiment, because when it comes to African fintech, rather African startups or African tech, it's the fintech that's been attracting the most money, right? And people have been willing to throw and write big checks. But now, even in the global environment, driven by interest rates, cost of capital is now, much higher. So your global investors who had a much higher risk appetite are now sort of matching their sentiment to what you were talking about just now. Your South African investors who have always taken, I'm just going to call it a dovish approach, to startups and that type of thing. So right now we're seeing venture capital, private equity sort of, shift around, financial technology and other technology businesses, now people are now starting to demand profitability more and more, right? For now, gone are the days where, exactly like to your point, you could do what Amazon did back in the day and go for years without turning a profit. In South Africa, probably one of the biggest examples we can think about is Takealot. To this day, from the old Kalahari.net days, the acquisition, now having Mr. D and Superbalist underneath it as a group, Takealot is still losing money. And that's another one that also shows you where investor mindsets are. Almost every year, Naspers is showing you how much each period of losses is now shrinking for them to reach that point of break even. So there's definitely that switch in investor sentiment.
Before I let you go, the Mudiwa, what's interesting here is when I think of these fintechs and thinking of this growth story, Paymentology also being one of them here, and how it has developed in the hands of private investors. Is there an incentive to ever go public?
In the current market, no. Unless you're doing it overseas, perhaps. And even then, you really need to have your valuation story on lock, because even right now, unless your name is attached to AI, the valuations that were being fetched pre-COVID, a lot of them aren't where they are. Right now, the names that are shooting the lights out, the likes of NVIDIA, right, have NVIDIA, TSMC, all of those companies have AI attached to them or are powering the AI revolution. And you also see the FANG companies, Facebook, Amazon, Netflix, Google, Apple, being some of the names that have driven valuations. But where you are looking to go into public markets, it's a little bit iffy. I think the ones to watch is how Reddit performs in terms of its IPO. I'm trying to think if there are any fintech companies I know that are going public. But in the current market, South Africa is not the place. Nothing against the local market, but we have to be real about the local market conditions. Perhaps they could do it in Europe. There's a lot more investor appetite. Perhaps they could do it, in the United States. Those are some of the options that are out there.
Brilliant, Mudiwa. Always fascinating talking to you. Thank you so much for coming. That was a technology correspondent for Business Day, Mudiwa Gavaza.